Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, folks. It's 7:56 a.m. Chicago time on Wednesday, the 18th of February, 2026. Can you believe it's already halfway through the month of February? This is episode number 2746. A lot to talk about today. Yes, I've been absent for a couple days here, traveling and holidays and so on. Glad to be back. Quick voice check, sound check would be very, very helpful. Am I booming in your ear? Okay, so what's on deck for today? Today we have some key news that came out, a couple things to discuss here. Let's jump into the pre-market summary sheet. UK inflation in line, lower than previous. This is, of course, playing onto the US numbers coming in softer while we move towards the mandated 2% inflation rate. US building permits came in higher than expected. There's also big news out of the White House. This came across, if you're a member, of course, you probably saw it this morning right here in our professional news feed. Trump administration is closer to a major war with Iran than people realize. This is a report by Axios alleging that a joint U.S.-Israeli attack is imminent. And as a result, we saw a pop in crude. There it is. There's your crude oil. That news, if you look at the feed, here, let's look at it again. That feed came across at 4:32 Chicago time. And right then and there, you could see the bar taking off and this thing kind of rising up a fair bit this morning. So crude over 2% pop, and we're seeing, otherwise we're seeing pretty much quiet on the indices, pretty much in line. The overall risk exposure for everything else, for the indices especially, is mixed. I'm not going to cover the earnings. You can get this report by following Convergent Trading by going to x.com/conv trading. You can see these are really important links down here. You might want to grab these and bookmark them. But you can grab this report so you can see what's really important today. Let's see what's up with this overnight inventory number. Let's refresh. Here we go. Refresh that number. There it is. 168,000 contracts in the S&P. But overall, we're seeing RN and RVol in the indices kind of quiet. Crude, although it has popped, you might notice that the RN and RVol are quite low. And the reason for that really is that crude has rolled to April from March, and so we're using the information that is, what is up with this thing? We're using information that is slightly skewed by that by the fact that we have rolled. We've got odd. I've got to check. Hang on. Let's do this. Let's do this, folks. Let's just do this. Let's reload this tick data. This stuff requires a ton of tick data, and I try to avoid having to do this, but here we go. We're going to reload the tick data and update this chart real quick. We're just blasting IQ feed right now with a full 5-day tick data request. These numbers should change slightly. But overall, we're seeing money jumping back into safety here in the metals, into crude. The cryptos have been snoozing. I'm sure all the crypto bros right now are kind of nervous, although we're still pretty high up there. As far as the S&P this morning is in a multi-distribution profile. We're seeing it trading a wide-ish range. We are hovering around the overnight point of control, but the overall profile is kind of serrated this morning. The volume's 168,000 contracts, which is just around where the mode is for the S&P over the last 252 overnight sessions. Nothing too exciting there. And the one standard deviation of the range overnight is 54 points, and we are at 52.25. That's why it's colored blue there. The overnight inventory is 65% long, long-ish, but not too dramatic. This afternoon, the biggest thing to pay attention to is the FOMC minutes. Okay, so that's at 2 o'clock Eastern, and that is that. So I'm going to move on past this portion and jump right into what we've got in terms of the technicals. So the S&P, what has the S&P done? We came down to an excess low last week. So if you recall, or 2 weeks ago, you recall, overnight we left this excess low down here, which I marked right away on the chart, as you can see there with a band. And then we pushed back up into this area where we attempted to take out the swing high, and then failed to do so. And so immediately this area here was marked as the seller supply, and we managed to come back and retest it last week. We came back to retest it on Tuesday right in here. Then we came back Wednesday, retested again, unable, and then we fell off. We fell off on Thursday. And then since then, it's been kind of a sideways show, and we're holding steady. So what do we have that we're looking at in this range is, if we're looking at the range of the last high, we have this kind of multi-distribution profile that we're dealing with here. Again, I'm going to have to do the whole thing where I have to draw a doobie for this guy and have him smoke it. There's some ashes there, right? So that's the profile that we're dealing with. This is a multi-distribution profile telling us that there's some pretty active price discovery in the zone. And we are just kind of dealing with a market that is unable to discover away from here. So above us, we have this buyer test area, buyer test zone. Hang on, let me turn down my news feed here. It's too loud. Above us, we have the buyer test zone. Below us, we have that excess low where we ran away from the lows. We saw pretty explosive buying, and then what we have is we formed an LIS overnight, which we currently breached. So the picture here, instead of being more supportive of a buy side, the expectation coming into today, earlier this morning, was that we are likely to attack the buyer test zone here, and I expect resistance. I expect a trade setup short term, or a structural trade long into that area, and it seems to be reversing here. So let's zoom in a little bit. So you can see where that came from, the coincidence of this overnight high, yesterday's high, and the breakout point, the imbalance forming in this zone, which is balance. There's balance there. There's a little bit of a collision imbalance there before we pulled back into the close, and we busted through this balance. So that made it the LIS for the session, and we're giving that up. What does this mean? This morning, when I first came in and did the homework, my sell card was off the table. I can buy, or I can sit. Now the sell card gets back on the table. All three cards are on the table, which means what? What have we talked about? When we look at the three cards that we have on the table at any given time, what are the rules for our trading? The rules are we cannot trade with all three cards on the table. If I can make an equally strong argument for a long as I can make for a short or for sitting on my hands or being neutral, then I should not be trading. If you take this advice, there are very few guarantees in trading, but I can almost guarantee that if you take that advice, it will keep you out of trouble and save you a ton of money if you look at the market from this perspective. So again, as a professional trader, been doing this now, this is my 26th year. I do not trade unless I either have a strong argument for one bias or a weak argument for the other, which means in either case, I'm pulling one of those cards off the table, right? Think of it as a kind of a nuclear code or something card. You cannot execute without it. You need to have that card on the table. So the question when you come in and right before you trade is, which card am I likely to, what's the card that I can pull off the table that gives me the best opportunity, right? So if I can take off the sell card, I can confidently buy. If I can take off the buy card, I can confidently sell. And it's that kind of mental shift that allows us to just sit through the trade, sit through the heat, let it bop around. As long as there's not an argument to put that card back on the table that we just took off, then we hold on to our trade. Nothing changes. Just because I'm short and there's a huge bid below and it's just not, doesn't mean anything. I'm trading the chart. I'm not trading the DOM, and I'm definitely not trading my P&L, right? P&L doesn't factor into the equation at all. And so with the LIS below us and the overall action bullish, the sell card was off the table, so I am authorized, so to speak. I have the ability to take longs, but with us hanging out below the LIS at this point, below the DGPs, meaning full session VWAP, full session mid, that means that now I can kind of make an argument for a short, right? If I can kind of make an argument for a short, then I can't get long anymore until it clears itself, which means I have to sit through whatever happens next. And you can see there are collisions on the top side here. On these wicks, there are collisions. There's supply here that's pushing things down. But it's not enough that would make me want to get short at the moment. What do I need to see to get short? I need to see an impulse down. I need to see it break lower. And then more importantly, a weak pullback. And then we could sell that weak pullback because it is likely to get exhausted. And then it starts to relieve to the downside. And then we can go for the overnight low in that situation. But right now, we have kind of a balanced market sitting right in the middle here. We've taken back some of the breakout, but look at where the bulk of the volume is in the overnight session. We're back in yesterday's range. And so it is much more likely now or slightly likely to test the prior settlement on that 74%, 73% statistic. So the expectation here is it's likely to recheck this LIS, get exhausted, pull back, get us back to prior settlement, which is right here. We're holding at 68, 60, 50 from last night, from yesterday's close. And then the expectation is we're likely to do the range all the way down to here. Why? Because of these wicks. You can see buyers coming in on both these bars. They attempted to push down into the mid yesterday and bounced right back up, and then it opened again, tried to push back into the mid, and it bounced back up, and then the short squeeze started happening right in this bar. So the expectation is we're likely to test this zone yet again this morning. So the expectation is for it to get down in here as a primary scenario. Okay, given how we're set up right now, that is the most likely play. However, if this thing decides, you know what, we're going to clear whoever's left long, test interest to the short side, and if then we get a response from buyers that is impulsive, that takes us back through the LIS, gets us above the full session mid, then we resume the retest of this battle zone. The overnight stat becomes the overnight high. And in that situation, I'm looking for a test of 69.30 right up in here in this retest zone. That's your second scenario. And again, this looks like I'm talking from both sides of my mouth. Oh, okay, so you might get short, you might get long. Wow, genius. You're an awesome trader. You've got a plan that says you might get long, you might get short. The thing is, my job is not to foretell the market. I'm not an oracle. I'd love to be one. What about Bitcoin at 50 cents? But my job is to be ready for whatever happens. Think of yourself as like a Navy SEAL or a Marine. You're trained, you've got a plan, you have objectives, you've outlined those objectives, being for scenario one, being settlement, being a retest of the exhaustion on the sell side. Those are the objectives. And then what do you have on the buy side? These are the objectives on the buy side. We're looking for 69.30, and then you just let the market do what it does, and then you respond just like a Marine would out in the battlefield. We're not here to predict where the enemy is going to be. We're here to respond and have a plan for that response. Okay, that's our goal. Notice the point of control shift. We just shifted our point of control down here. If you didn't see it, we shifted our point of control from here to here. Quite a sharp point of control here. This is likely to move away from here quite quickly on the open. On the NQ, a more crowded trade. So if we look at the NQ, we have that same excess that I talked about from a couple of weeks ago. We have an excess. We could see that we could detect and read the buyers very cleanly down there. We managed to push up. We managed to create these multiple weekly highs, but the real supply in the NQ is way up here in the 65, 60, 30 to 65, 700. That area is expected to be a pretty decent supply zone. An additional supply zone that I could draw here is this area right there. This area is likely to give it pause as well, but I didn't want to put too much on the screen. But if we zoom in here and look at what it's done, you could see that yesterday there was a pretty strong response from buyers, just like in the S&P, a pretty decent response. So I set this up as a short-term buyer protection. This is in the ES. This is basically the test area on scenario one. I set it up as buyer protection for the Nasdaq. It's got a lot behind it here. Okay, this is likely to be a tough area for the Nasdaq to break through. The expectation in the NQ is very similar to the ES, but the target to the upside in the NQ is a little bit tighter. Okay, so as we look at this, we're probably going to pull back. We're inside of the prior day's range, so we have that prior settled stat, and then it has not shifted its point of control down yet. The idea is it's very likely to give us a pullback to short, looking for this buyer protection zone, and that'll be my primary scenario. This is in line with the NQ, and you guessed it, on scenario 2, if it doesn't sell off, we're looking to the buy side, and for that, we're looking for it to drop, balance out the overnight inventory, impulse into the key LIS, and then retest the overnight high, give us the overnight high stat, which puts us right in this seller supply area, this immediate seller supply area in the 24,960 to 25,050 area in the NQ. It may bust through here and start reaching for that higher area that I talked about, but the expectation is it's likely to stall out. We do have that FOMC number at 2 o'clock today, and that may give us some movement or some pause for the time being. Crude has an SOC right in here. This is the crude SOC, scene of the crime, based on that release from Trump right in here. This news release, again, if you're a Convergent member, this is your CT news. Came across nice and clean this morning. So having an SOC down here makes it suspicious that this is to continue. Now, if the news is true that we are going to war again with Iran, as if that'll solve anything, then this is likely to start moving towards the 65.50 pretty quick on the double. If not, I'm expecting crude to come back and retest this buyer retest area, which I misspelled, buyer retest area. And if not, then I'm expecting it to hit the SOC and back to settlement. Again, that'll be the secondary scenario. For now, all indications with the LIS below us, all indications is it's likely to keep floating up. An object in motion shall remain in motion unless a force is acted upon it, right? Newton's laws, kind of similar to Market's laws. Okay, that's it. That's 23 minutes of me yappity. Be sure to subscribe to the channel and like the video. I'll catch you all on Friday morning. Okay, cheers.